How to day trade in 2024. This is your full guide starting from the very basics. Let's get right into it. So what is trading? Trading involves buying and selling financial assets in hopes of making a profit. So oftentimes in trading, you'll hear people say buy low, sell high. What they're referring to is that they're buying the price of the asset low and they're selling high and they're making a profit between the difference of the low and the high. So this can get a little confusing sometimes because in trading, we make money in one way. We make money if we're right. We can make money if the price goes up and if the price goes down. If we make money when the price goes up, this is often called a buy position or a long position. Making money when the price goes down is often called a put option or a sell position or even a short position. So you can make money when the price goes down, but as traders, our focus is to be right. So if we make a trade and that trade plays out in our favor, we make money. Where are people trading? So there's four main markets that people will be trading in. A market is a marketplace where buyers and sellers meet and agree on a certain price to buy or sell an asset. So people are trading on markets. People are trading on the stock market, the futures market, the Forex market, crypto market, and even the real estate market. We're going to be focusing on these four today. What apps do you need to trade? This is the most common question I get asked, and we're going to be going over all of it right now. So there's two main types of apps you'll be looking at as a trader. The first type of app is your charting platform or your information platform. This is where you'll be looking at the price of the stock, you'll be looking for patterns, and you'll be looking at technical analysis of the assets you're looking at. For my trading, I like to use TradingView as my charting platform. So that's the first type of app you need is a charting platform, and I recommend that you use TradingView. The second type of app you need is a broker or an execution platform. A broker is where you'll actually be placing these trades. So keep in mind, this is different from a charting platform. Our charting platform is what you use to look at the prices and to look at the charts, and an execution platform is what you look at to execute these trades and to actually place these trades. Keep in mind, a broker used to be a physical destination. When your parents were kids, they would have to walk to the broker, hand them money, and the broker would hand them back a piece of paper showing that they now own the stock. So as you can see, times have changed, and now it's very, very easy to buy and sell stocks. You can literally do so by pressing a button. So when you think broker, remember that back in the day, brokers used to actually be a physical establishment where you actually had to walk, hand them money, and then they would hand you back a certificate that showed that you own the stock. But now you can do all that instantly, literally just by clicking buttons with your fingers. So now let's go over some of my favorite brokers for each asset class. The first broker I like to use and that I use most often is Tradeovate. I trade futures mainly, so I'm looking at ES futures and I trade futures using Tradeovate. I highly recommend Tradeovate. It does take a little bit of time to get approved, but once you get approved, you will love it. Really good features, really good interface, really good customer support. I give Tradeovate an A+. The second broker is Robinhood. Robinhood gets a lot of hate because Robinhood did have an issue back during the whole AMC GameStop thing where Robinhood was halting people's trades. Now, this is not good, but for beginners, you should be good on Robinhood. Robinhood is a very easy to use platform. I have had no issues with Robinhood since the GameStop thing. Obviously that was annoying, but 99% of the time I am not trading meme stocks. So Robinhood is very good. It's very simple, it's very intuitive, and you can start an account right now for completely free. So I recommend Robinhood. The third broker I'll recommend is Webull. Webull is also for stocks and options, similar to Robinhood, but Webull is a little bit more advanced. Right? So Webull has a little bit better charting, they have a little bit better tech, it is a little bit more advanced, there's a little bit more of a learning curve, but it's also a great broker. So for brokers, we have Tradeovate for futures, and for stocks and options, we have Robinhood and we have Webull, and I'm also going to give you one more if you're an international person watching this. I recommend you check out Interactive Brokers. So check out Webull, Robinhood, Interactive Brokers. Interactive Brokers has stocks and options, and they also have futures, and Webull just added futures too. Now for crypto brokers, I'm not going to get into that at all because I live in the US and crypto in the US is very restricted. So you will have to do your own research to find a crypto broker, but 99% of the time I'm trading futures or I'm trading stocks and options, and those are the brokers that I use and that I feel comfortable with. They're also all regulated brokers. Make sure you're using a regulated broker. If you're trading Forex and your broker is having you deposit in crypto, please stay away. That is very sketchy. You should only be using US regulated brokers or brokers that are regulated by the country that you live in. All right, so we just covered the best brokers. Now let's go over asset classes. So what are you actually trading? What markets are you trading in? The first asset class and the most popular asset class is stocks. So when you're buying and selling stocks, you are literally just buying and selling shares of ownership in a company. So buying and selling stocks is often misunderstood because people think that trading stocks is a very quick thing, it's very up and down, and that can happen, But in order to trade stocks intraday, so in order to day trade stocks, you will need a lot more money. So for you, or for whoever's watching this, I recommend that you look at stocks with a more long-term perspective. That's what I do. When I'm trading stocks, I am investing. So I'm buying something and then I'm expecting it to go up in the next 5 years, in the next 10 years. My long-term investing strategy is very simple. I buy stock in companies that I use, and I buy stock in companies that I think are going to continue to make money and be around in 25 years. So I like to keep it very simple, similar to Warren Buffett. He does the same thing. He invests in companies that he believes in and companies that he sees value in. Now, the second type of asset class is options. So options are a lot more risky, but they're also a lot more rewarding on a shorter time frame. So when you're trading options, you are trading a contract of the underlying stock. So I'm going to give you a simple summary on options. This is going to be a very quick summary. This is not going to be a whole guide on options, but an options contract, when you buy an options contract, it basically means that you have the right to 100 shares of that stock. So for example, if I buy an options contract and it costs $3, I will take this $3 and I will times it by 100 or 100 shares, and then this options contract will cost me $300 to get in. So that's a little bit of math behind options and how they work. There's a lot of other factors that go into options, like implied volatility, like Greeks. I'll do a separate video about that, but for now, all you need to know is that options are a lot more risky, but they also have a lot more reward, and they're much more suitable for trading intraday, for trading within a few hours, and for swing trading. And with options, you are trading a contract of the underlying asset. So you're trading a contract of the stock that you're looking at. Now, the third asset type is cryptocurrencies. You might have been hearing a lot about crypto, about Bitcoin, about Ethereum. Let's talk about it. Who should trade crypto? Who should not trade crypto? And how should you trade crypto? So there's two types of crypto trading. You can either be trading spot crypto, meaning you're literally just buying and selling crypto. You have $1,000 in your account, you bought $500 of crypto, and you buy another $500 of crypto. When you're buying without any leverage, without any margin, that is called spot trading. Now, the second type of crypto trading, which is a lot more risky, but also has a lot more reward if you're doing it right, is leverage trading. So leverage trading means you're trading with borrowed money. So if I have $1,000 in my account, I can actually usually trade with around $100,000 worth of capital because I am using a leveraged account. So when you're trading with leverage, it's very, very risky because you can get liquidated very fast, because when you're trading with a position size that is worth a lot more than your account is worth, this means that it'll only take a little bit of a move to make your position go up a ton or down a ton. So you can get liquidated very fast. So trading crypto with leverage is very, very risky. Yes, it can be good, but if you're a beginner, I recommend you stay away from that and you just focus on spot trading crypto. A little backstory behind me, I actually made a large portion of my money that I initially used to fund my trading account by spot trading Litecoin. So I would literally just go on Litecoin, I would mark out the highs, I would mark out the lows, and I would look at Litecoin movement relative to Bitcoin. So whenever Bitcoin went up, 10, 20, 30%, I noticed that there was a pattern that Litecoin would move up 30, 40, 50% in the following days. So this pattern still does occur. So whenever Bitcoin has a really big move, look at the top 10 coins. So look at the top 10 coins and even look at the top 25 coins and the top 100 coins. And these other coins will move more than Bitcoin, because when people are selling Bitcoin, they have one goal: to make money. So they sell their Bitcoin and they put their Bitcoin, or they put their US dollars in these other coins, because when people take profit from Bitcoin, they're thinking, what's next? How can I make more money? So what are they doing? They're buying these smaller crypto coins. So Solana, they're buying Litecoin, they're buying Bitcoin Cash, they're buying Polygon, they're buying stuff like that that's a lot smaller and that has a smaller market cap, so that when it does go up, it grows a lot more. Because when people make money in Bitcoin, they immediately go, how can I make more money? And the answer to that is by buying altcoins. So with crypto, I recommend spot trading. I also recommend swing trading. So with crypto, a lot of these moves will take a few days or a few weeks to play out. So I recommend get your charts, find something you like, pick one asset. So pick Litecoin or pick Ethereum, pick one thing, master it, and then really just understand how that asset moves and how you can make money off that. Now, the fourth asset class is futures trading. This is what I like to trade. I trade futures. So every single day, I log on my computer and I'm trading ES futures. So what is ES futures? ES futures is the futures contract of the S&P 500. So just like you can trade options on the S&P 500, you can also trade futures on the S&P 500. So basically all I'm doing, if you're familiar with SPX, is I'm trading a leveraged version of SPX or SPY or S&P 500. So with futures, there's going to be two things you have to keep in mind. The first of all is futures does require more capital. So this does not necessarily mean that if you don't have money, you're not going to be able to trade futures, because what you can do with futures is you can get a funded account. A funded account is a company that will have you pass a few tests. So you'll pass a few tests, you'll show them that you're able to make money trading, and then they will give you a funded account, meaning it's an account that has a set amount of funds, and it's simulated funds, but if you make money, let's say you have a funded account with $100,000 and you make $10,000. You will keep around 80% of this $10,000. So you will keep $8,000, and initially this funded account will cost you probably around $200, $300. So this can be a really helpful thing to do if you know that you have a profitable strategy. If you don't know that you have a profitable strategy and you're just trying to make quick money, I promise you, this is harder than it sounds. Make sure you have an actual profitable strategy before trading with these funded accounts. You should be able to see profitability for at least 3 months on a demo account before you're switching over to these live accounts, to these funded accounts. So make sure you're able to make money, make sure your strategy works, and then switch over to a funded account and then make some real money. Now, the final asset class that people trade is Forex. So Forex is a very interesting one because currently there's a lot of issues going on in the Forex space with brokers. A lot of these brokers that were Forex brokers were registered in other countries. So they were registered in these little tropical islands. And what happened was MetaTrader is the main infrastructure for all these Forex brokers. So MetaTrader is basically an app that says to these Forex brokers, hey, you can come on, you can use MetaTrader in exchange for a small fee. So what recently happened with MetaTrader is MetaTrader has started removing all of these offshore brokers from their platform. So MetaTrader is an app, and these brokers are all based in these other countries, and MetaTrader is saying you can no longer operate on MetaTrader. So everybody who is trading with these offshore brokers has no more access to their trades. They can't get on, they can't make trades, they can't get their funds because the app that they used is now banning their brokers. So think about MetaTrader as like the house for all these brokers, and MetaTrader is literally just kicking all these brokers off and saying, nope, you're not regulated. Nope, you're based in an island that I don't like. Nope, you have affiliations with certain country. You're out. So MetaTrader has been kicking off these brokers, and people have been left without a broker. And it's not good because people spend a lot of time, people spend a lot of money trading, and they're just kicked off immediately. So that's not good. And the reason I say that is because you should be extra careful with Forex right now. So Forex, at its very basic, you are trading currency pairs. You are trading US dollar versus Japanese yen. You are trading Japanese yen versus Great British pound. And that's what you're doing. So you're trading the foreign exchange market and you're trading currency pairs. I recommend Forex to you if you're somebody who has a lot more money, just because you will no longer be able to trade Forex with leverage in the US. So if you do already have a good amount of money and you have some time on your hands, you should definitely be learning the Forex market. You will be finding some swing trades with Forex because over a few weeks, over a few months, these currency pairs are likely to move a lot more than they are in just a few days or a few hours. So now you know the basics of what is trading, what are the different brokers, what are the different asset classes. Now let's talk about the 4 types of trading. So there's 4 main types of trading that you'll be doing. Let's start with the one I do. I do scalping. Scalping means that I am entering and exiting trades within 5 minutes to an hour max. So I'm taking quick trades in hopes of large, quick profits. So I'm trading ES futures, I am scalp trading, and I'm literally getting in and out of a trade, usually within 10 minutes. So my average trade time is 10 minutes. So what does this mean? This means that for me, I am done trading within the first 2 hours of the day. So I trade from 8:30 to 10:30. After 10:30, I am no longer trading. After 10:30, I am working or I am going out on the jet ski. I'm doing something else. So that's one of the things I love about trading is that I can literally only focus the first 2 hours of my day on something. And then after that, after I get on, I make my money, I find my setup, I can go do whatever the fuck I want to go do. And that's awesome because most careers, most things in life will restrict you, right? But with trading, obviously, there's a lot of time. This is not an easy thing. But once you get to that level where you're able to make profits, you can trade in the morning, or you can even trade once or twice a week, or even once or twice a month if you're doing a swing trade. And then you can spend the rest of your time getting creative. You can spend the rest of your time doing things that you enjoy in order to give you a clear mind, in order to give you a mind that will allow you to make those great trades again and to continue making money. So that's the first type of trading, scalping. I like it a lot. You can tell that I like scalping. It's just my style. The next type of trading is day trading. So day trading means you're in a trade for either 1 hour or 12 hours. So after 12 hours, I would consider it more of a swing trade, but day trading means you're in a trade for an interval of 1 day. So you're in a trade within an interval of 24 hours. Scalping, I would say that you're in a trade for under 1 hour. Day trading, you're in a trade for under, let's just call it 24 hours in the same day. So the next type of trading is swing trading. So you may have heard me mention swing trading earlier in this video, and you might be wondering, what is swing trading? Swing trading means you're in a trade for longer than a day. So if you're in a trade for 3 days, that's a swing trade. If you're in a trade for 2 weeks, that's a swing trade. Even if you're in a trade for 3 months, that's a swing trade, right? So anything under 6 months, I would call that a swing trade. Now, the last type of trading is investing. Investing is actually one of my favorite types of trading for the sheer reason that I get to buy something, never look at it, and then make money, right? So it's very simple. So I look at something, I like it, I buy it, and if the company does well, if the crypto does well, I make money. So investing is great. We talk a lot about investing inside of our community. We have a whole sentiment analysis team. So we have a whole team of researchers that actually research global events. They know exactly what's going on in terms of global politics, in terms of war, in terms of all these different factors that will play into the price of assets, and they give ideas to our members. And I'm on this team, I provide ideas as well to our members based on these sentiment analysis ideas. So sentiment analysis basically means analyzing the news, analyzing world events, analyzing how people are feeling, and then putting this into an investment idea. So investing's cool. My favorite thing about investing is that you don't have to monitor it. You can literally just go on, buy it once, and then obviously you have to sell it. But in that waiting period, you don't really have to do anything. I mean, some people get really emotional and they look at the charts. They're like, is it up? Is it down? Is it up? Is it down? Is it up? I'm not like that. I literally just buy and I wait. And if it makes money, it makes money. And if it doesn't make money, it doesn't make money. But it won't matter because I practice risk management, meaning every single time I risk money, I'm doing so in a way that's very responsible that will allow me to continue making money because I'm only risking a small amount of money. So the two most important things in trading, let's talk about them. Risk management and risk to reward. So let's start with risk management. I just covered that briefly. I'm going to cover it a lot more. So risk management is how much of your account are you risking, and are you exiting trades and entering trades in a responsible way? So let's say you have a $100,000 account. I would not recommend to risk more than 1% of your account. The more money you have, ironically, the less amount of money you're going to want to risk. This is because the more money you have, a smaller percentage will still be a good amount of money, right? So let's say you have $1 million. 1% of $1 million is 10 grand. 10 grand is a lot of fucking money. I don't care how rich you are. 10 grand is a lot of money. So for me, I like to risk between 1% to 2% of my account. I'm rarely ever risking 2% of my account. If I'm super confident, I might risk 2% of my account. And I will admit, I do trade with a large amount of capital. So 1% for me is going to be different from 1% from you. You might have a lot of capital. You might not have a lot of capital. But as a rule of thumb, you should never be risking more than 2% of your account at all times. So never, never, never. I highly recommend that. And I would even say I would stick to risking under 1% of your account, especially as a beginner. And what this will allow you to do is two things. One, it will allow you to lose trades. People fuck up. We will fuck up. We are traders. We are not perfectionists. We will lose money sometimes. So we want to make sure these losses do not take us out. When we're trading with only 1% of our account, this is great because if we lose, it doesn't matter. Right? People always ask me, like, how do you handle your losses? I handle my losses by preparing for my losses initially so that I don't have to get to the point where I'm stressed about my losses. A lot of you never handle your losses because you don't have a plan initially. Before I enter a trade, I know exactly how much money I'm going to lose, so I'm not stressed out. Most of our fear comes from the unknown. As humans, we fear things we don't know. That's why kids get scared in the dark, is because they don't know what's in the dark. There could be a monster, there could be a dragon, right? So this same fear comes back in trading when you're unaware of how much money you're risking. So if you want to eliminate this fear, just understand how much money am I risking before the trade. So that'll come into the second part about trading. So risk management is how much of your account are you risking. The second part is risk to reward. So how much money are you risking on each individual trade and how much money do you expect to make? So there's a ratio for this. So basically this ratio equates to how much dollar amount are you risking in order to earn what dollar amount back. So it's a multiple. So if I say I am risking 1 to 10, that means I'm risking $1 to make $10. Obviously, I'm trading with more than $1. So it'd be like I'm risking $1,000 to make $10,000, but the equation is 1 to 10 or 1 to 5. So personally, I target a 1 to 4 risk to reward ratio. So every single time I enter a trade and I risk about $1,000 per trade, I'm either losing $1,000 or I'm making $4,000. So this is a very good risk to reward ratio. And what this allows me to take some losses and not really worry about it because I can lose 2 or 3 trades, but as long as I have that winning trade, I will make money. And oftentimes, recently, I'll be targeting an even higher risk to reward ratio. So I would say my average risk to reward ratio is probably about like 1 to 6 right now. It's probably about 1 to 6 right now. So I'm risking $1,000 to make $6,000 back. So this allows me to take losses. This allows me to have some wiggle room of, okay, you can lose this trade. You don't have to win every trade. And it also allows you to trade without fear. So many of your trades will be either won or lost based on your emotional state. So when I look at the charts, I'm fearless because I know how much money I'm going to lose per trade. So if I look and I see an opportunity, bam, I enter, I execute because my mind is in a place that's ready to capitalize on opportunity. A lot of you are not ready to capitalize on opportunity because you have not yet identified a plan for your risk management and your risk to reward. So those are 2 really important things. The last thing, the most important thing, the reason you're either going to fuck up on this journey or you're going to make it is your mindset. Now there's 2 aspects of mindset. The first thing is how you view trading as a whole. So are you viewing trading as a short-term, get-rich-quick gambling thing, or are you viewing it as a skill that will take time, effort, and hard work to develop? So that's the first thing. How are you viewing trading? And you need to view it as a long-term thing. I think that kind of goes without saying, but a lot of you may even be doing this without really understanding it. you might be thinking that trading is a get-rich-quick scheme, and you're not even really understanding it. So here are a few signs that you're looking at trading as a get-rich-quick scheme. The first thing is you get mad whenever you miss a trade. Whenever you look on and you see somebody else making money, you get mad. That's the first sign. The second sign is you get mad whenever you lose money. You lost one trade and you're all mad, right? These are two signs that you're not really looking at it in the right way. This is a long-term skill, guys. This skill is like anything in life. This has taken me years and years. My first 3 years of doing this, I sucked. I didn't make a single dime for the first 3 years, a single dime. And people are out here on their second or third day getting mad because they didn't make money. And I was getting mad too, but then I realized this is a skill, and this skill has allowed me to change my life, to live my life in the way that I want to live my life, but that would not have been possible if I did not persevere, if I did not look at myself in the mirror and say, this is going to take time. This is going to take a version of you that is ready to deal with failure, a version of you that's ready to deal with stress. So you have to elevate your person, yourself, in order to become a profitable trader, in order to become somebody who makes money in the financial markets. The other great thing about this is that now that I have this skill of reading financial markets, I can use it in real estate, I can use it to invest, I can even use it to invest in startup companies. So I can take this skill of understanding trends, of understanding business, and apply it in other ways to make more money. So that's the great thing. Now, the second part of your mindset, you have to be fearless. When I say fearless, I do not mean that you don't have fear. I mean that you still have a little bit of fear, but you act despite that fear. It's not about having no fear. It's about having fear and still being able to get in and get out on the charts when it makes sense, right? A lot of people think that being fearless is about having no fear. We all have fear. You just have to place your fear in the right place. Place your fear. Be fearful of being worse than you were yesterday. Be fearful of never becoming the person you want to be. Be fearful of never being able to live your dream life. Do not be afraid of failure. The people who have made money, the people who have been successful in any area of life have failed a ton of times. This is why they're able to make a ton of money or be really good, is because they learn that failure is not the enemy. The enemy is staying in the same place that you are today in a year. That's the enemy. The enemy is not failure. You're gonna fail, it's gonna be okay. Learn how to manage your failures using risk management and identifying a good risk to reward. And a failure could often be more than a losing trade. Maybe you had a losing week, maybe you had a losing month, right? So journal. This is another big thing. You want to really be taking a note of why you won, why you lost. Every single time you win or lose a trade, you should be journaling. Why did you lose, right? Was it a technical mistake? Was it a strategic mistake? Was it a mental mistake? Or was it a win? Was it a technical win? Was it a mental win? Like, what contributed to your win or your loss? This way, you have a whole set of data that will allow you to look back and say, okay, this is what I'm good at. This is when I mess up. This is when I'm really good. And they'll allow you to data collect and put yourself in a position where you're able to see what you're good at and see what you're bad at. And this is very, very important. So what's next? You know how to trade, you know the different asset classes, you know the different types of trading, you know the brokers, you know the apps. What are the next steps for you to take on your journey to becoming a profitable trader? So the first step is I want you to pick one asset class. So many different people are gonna come on here and tell you that they're trading all these different assets. It's baloney. Pick one asset class, focus on one asset class. As a beginner, your mind is already going to be so clouded with information, so focus on one asset. Comment below what you are trading. Personally, I trade ES futures. So if you want to trade what I'm trading, you can trade ES futures. You can also trade gold. You can trade Bitcoin. You can trade Tesla stock. You can trade anything you want to trade as long as it's one asset. I don't want to see people comment 5 tickers. When you comment below, comment one asset class that you are trading so that you can focus and you can refine your strategy and refine your approach every single day, and you can execute flawlessly in that market. So the next part will be develop an understanding of charts, develop an understanding of how to use the software, and develop an understanding of how to use the broker. So really just get a basic feel for how to use all this stuff. Now, I do have some tutorials, but I also want you to just feel around. I want you to get on there, I want you to click buttons, I want you to spend some time and really just learn. It's like when you were a kid and you downloaded a new game. At first, you don't know how to play the game, right? But luckily there's a tutorial, and in the game, you're gonna press the wrong button a few times, right? So make sure that before you start pressing any buttons that say buy or sell, make sure that you do not have any money in, you're literally just learning, right? So before you're buying and selling stuff, you should be in a position of learning. So trading goes like this. First you learn right here, and then you earn. So learn and then you earn, right? I didn't make that up, that's not me. Shout out to whoever created that up, but it's a very, very important thing. So learn and then earn, right? You don't want to try to earn before you learn, because then you'll just end up losing all your money, and then you'll never have any money to learn with because you lost all your money, and then you'll hate trading and you'll be one of those angry, unhappy people that comment weird things on my Instagram. So take the time to learn so you can be one of those cool people that sends me pictures of their profits and that I get to post on my story every day, one of the people who are making money with me. So the people who are at that position that are making money, it's because they took the time to learn. So now they're earning. right? And that applies to most things in life, especially anything that has to do with online business or making money online. Learn and then earn. So the next thing I want you to focus on is practicing. I want you to focus on building a strategy. Obviously, you could use my strategy. I highly recommend my strategy. I love my strategy. Everybody loves my strategy. My strategy is great, but if you want to go ahead and create your own strategy, you can do so, right? I'm just telling you right now that my strategy is very, very simple and it works, and beginners like it because it's simple and it's not confusing and it does not use any of these confusing terms like a lot of these other strategies. So I want you to find this strategy, and then I want you to practice on a demo account for 6 months. I want you to get 6 months of consistent profitability before switching over to a real account. Now, you could be watching this right now and you could be thinking to yourself, 6 months? I don't have 6 months. I want to start making money right now. If you want to start making money on a shorter time period, here's what I'll tell you. This is not financial advice. This is not me telling you what to do, but here's the thing that you have to know. If you are in a position where you do have some more money, where you can afford to lose money, what you could do is you could start up a very small account. So let's say $1,000 is a relatively insignificant amount of money to you. So for example, let's say when you go out with your friends to Vegas, you bet like $5 grand and you're comfortable losing $1,000. If you're comfortable losing a certain amount of money, you could also use this instead of your demo account. So you could set aside, say $5,000 for a trading account and tell yourself, this is money that I'm okay with losing. You could practice like this, and then this will allow you to deal with that emotional aspect, and it will also allow you to start making actual money. So if you do have that profitable strategy, you'll be able to start earning money much quicker. But if you're not in a position where you can afford to lose any money, I would say practice on a demo account and then focus on moving over from a demo account to a funded account. But if you are in a position where you have some money to lose, I would just start with a smaller account and then practice on the small account, but make sure you understand how all this works. Make sure you understand brokers, fees, all that good stuff. Me personally, I never used a demo account. I made a good amount of money swing trading Litecoin. So I made my money with Litecoin, and then I had some capital to be able to mess around with, to be able to put into Robinhood, to put into these futures brokers, which gave me that kind of wiggle room that allowed me to lose some money and then eventually develop a winning strategy. Trading is going to take you some time to learn. If you want it to take you less time and if you want to learn quicker, I highly recommend joining a great community. When you join a great community, you will learn 10 times faster because people who are already profitable traders and people who have already solved the issues that you're facing will be able to come on there and help you. So let's say you're facing a current issue and somebody who just solved that issue and is now profitable is in the community. They can come on there, tell you exactly what they did to solve their issue, and then they can help you reach that level or get over that hump because they've already done it. The second benefit is that you're surrounded by quality information and quality traders. So I always say you are an average of the 5 people you surround yourself with. So if you're surrounding yourself with a great community of people who are already profitable, it's almost inevitable that you will become profitable. So it's almost impossible for you to not become profitable if you're taking action. So if you're in a community with me, with my other analysts, and we are literally providing you with trades every single day, we're giving you analysis every single day, we're giving you education every single day, we're answering your questions, this will make your learning curve not only easier, but much more enjoyable because you're actually learning from people who have actually done what you're trying to do, from people who are actually in the field every single day doing what it is that you want to do. So if you do want to join our community where we have live signals, we have live trading, we have a live stream, we have a full course, we have a ton of other stuff. We have literally the best community in the world. You can join by clicking the link in the description of this video and joining the premium community. I appreciate you watching this video. I'll see you all soon. RP out.